I think there are going to be multiple unicorn companies built helping people generate yield on Bitcoin, particularly if you think Bitcoin is going where I think it's going, which is there are going to be a lot more people who have substantial wealth in Bitcoin. They're not going to be comfortable with 0%. They're going to want to do something with it. So I think it's going to be a huge place of innovation over the next few years. If you have 100% gold exposure, you're short Bitcoin. Like the neutral position for central banks is going to be 90% gold, 10% Bitcoin. The US is moving in that direction itself with the establishment of the strategic reserve. I don't think countries around the world can run the risk of being on the wrong side. I think central banks around the world have been put on notice that they need to at least get to a parity position of 90-10. And I think you're going to see that happen very fast this year. I suspect, maybe there are 10 countries that own Bitcoin today. By the end of the year, I suspect that'll be 20 or more.
Matt Hougan begins with a daring observation. Cryptocurrency and Bitcoin are no longer merely speculative investments. They are increasingly being used as the cornerstones of contemporary portfolios. The world is realizing the value of digital assets as a hedge against inflation and currency devaluation, from institutional investors to forward-thinking enterprises. However, what is driving this change and why is it taking place at this time? If you're intrigued by bold predictions and deep financial insights, make sure to like this video, subscribe to the channel, and turn on notifications for more engaging content. Thank you for your support and enjoy the video.
We're going to find out that there's at least another country that has done this. The thing you see in the world right now is central banks dramatically increasing their allocation to gold. Right? That has been a major theme over the last year. That's a big reason why gold is at all-time highs. The reason they're doing that is that the US has weaponized the dollar. Right, we seized Russia's Treasury assets, and central banks around the world realized they needed to diversify their holdings into hard assets that weren't subject for seizure. So that's a rational response. I think central banks are going to look at it and say, if you look at the hard asset currency market right now, it's 90% gold and 10% Bitcoin. That's just, again, objectively true. Gold's a $20 trillion asset. Bitcoin's, say, $2 trillion. If you have 100% gold exposure, you're short Bitcoin. Like the neutral position for central banks is going to be 90% gold, 10% Bitcoin. The US is moving in that direction itself with the establishment of the strategic reserve. I don't think countries around the world can run the risk of being on the wrong side of that history. It's akin in my mind to the early days of the internet. If you were a newspaper and you saw like 10% of your audience was reading your newspaper in a digital format, was the right response to just ignore it? Or was it to launch a web effort? It was clearly to launch a web effort. And time and again, people are skeptical of these digital versions of analog goods. And time and again, the digital version comes to parity or more. I think central banks around the world have been put on notice that they need to at least get to a parity position of 90-10. And I think you're going to see that happen very fast this year. I suspect, maybe there are 10 countries that own Bitcoin today. By the end of the year, I suspect that'll be 20 or more. Yeah, we'd go from 0 to 100 overnight, right? Every country would be on notice that the game is on now, and there'd be a gold rush for owning Bitcoin. If we make the statement that you need to be balanced, and we make that statement particularly if we make the statement by selling gold to buy Bitcoin, I think you're going to see every country, not every country, but virtually every country start to want to build a position in Bitcoin. Because there is a world in the future where the world wants an apolitical currency to settle international trade. And if you don't have a staked position in that before that happens, you've really, really missed out. So I think if that happens, we're off to the races. I think even if the US government uses other means to acquire Bitcoin to build that reserve, I think we're off to the races a little bit slower, but still off to the races. And I expect that one of those two versions, I think, will happen within the next 12 months. I think they're going to be less volatile than in the past. The reason is that there's just more diversity in participants. If you go back like 10 years ago, it was all crypto native cypherpunk types who were early to this space and had one worldview that was very high risk tolerance. And so you would see them do things like adding leverage as the price went up, and that created, extra volatility. And maybe they didn't invest the way most people invest in stocks, which is through their 401ks, putting 2% of their salary to work, every month or whatever. what's happened over the last few years is that we've added to that retail contingent corporations, governments, institutional investors, financial advisors, family offices, each of which moves to a slightly different cadence. And so at the same time that, let's say, retail would actually pull back and sell, you have people investing in their retirement accounts that buy each month. At the same time that maybe that's not enough to keep up, you have corporations or governments coming in and buying. It's just going to smooth things out. Now, it's not going to be up only. I'm not saying that. It's not going to be like investing in short-term treasuries. It's still going to be volatile, but it's going to be less volatile than it was in the past. And I'm not even sure we're going to see the same sort of 4-year cycle trend on an ongoing basis. I think it might look different than that, particularly for the next few years as these institutions really come into the space. They just have so much Bitcoin to buy to get to neutral that I think there may be a few very good years ahead of us for now.
In addition to its enormous $37 trillion national debt, the United States has a deficit of over $2 trillion annually. Additionally, fewer foreign nations are willing to purchase Treasury bonds issued by the United States. Countries like China are retreating, in part because to concerns that their investments might be confiscated or suspended for political reasons. Therefore, the key question is, what happens if foreign purchasers lose interest and the United States needs to borrow additional money? For further updates on Bitcoin and the wider world of digital assets, please take a moment to like this video, subscribe to the channel, and enable post notifications before we go any further. Thanks, and enjoy the video.
I know a lot of people like to look down the chain to these smaller cap assets or these different sectors, which are exciting, but you have to remember that like 2/3 of the market is Bitcoin. And many of the people, as you mentioned, that hold Bitcoin don't want to sell it, but still have to pay the rent. And so they want to generate, 2, 3, 4, 5% yields. How can you do that? You can do it through staking with Cordell or Babylon. You can do it through lending. There are lending programs that are emerging. You can do it through option overlay strategies. There are probably other ideas. But in terms of the place to build as an entrepreneur, I think it's one of the most exciting places. It has this really unique thing, which is, there's a mismatch between how much time we spend talking about Bitcoin versus how big it is in the market. We talk a lot about Bitcoin, but I'm not sure we talk about it 2/3 of the time, right? We talk about ETH, we talk about Solana, we talk about DeFi, we talk about DePIN. I think we underweight the importance of Bitcoin, and very few people are talking about this income thing. I think there are going to be multiple unicorn companies built helping people generate yield on Bitcoin, particularly if you think Bitcoin is going where I think it's going, which is there are going to be a lot more people who have substantial wealth in Bitcoin. They're not going to be comfortable at 0%. They're going to want to do something with it. So I think it's going to be a huge place of innovation over the next few years. We'll start from the principle that the US has a lot of debt and is creating more debt all the time, right? We have $37 trillion in debt. We have a $2+ trillion annual deficit. And that means that people need to loan the US money. Historically, the people who primarily loaned the US money were foreigners, at least for the last 20 years. Right? China was a massive buyer of US Treasuries. Other countries were massive buyers of US Treasuries. But that started to fall substantially. One catalyst was the US seizing Russia's Treasury assets, which told foreign nations that aren't our explicit allies that there's risk in buying US Treasuries. You don't want to buy something if the US might effectively just cancel it because of geopolitical reasons. So the US faces this challenge, which is we have $37 trillion of debt. We periodically have to refinance it because that debt comes due. I think there's like $12 trillion that needs to be refinanced in the next couple of years. And the primary buyer is disappearing. So what do? There are really only two answers. We could ask US investors to buy more debt, like me and my wife and her mom, but that's a limited market. Right? And so they wouldn't be able to buy as much debt as we need, which would mean we would have to offer higher interest rates, which would drive up the cost of borrowing. It'd be bad for the US. The other is to find a new buyer of that debt. That's where stablecoins come in. Stablecoins, as you mentioned, are digital dollars available on the blockchain. What that means is that anyone around the world can access dollars now through their cell phone. If you're in Argentina, you can create a digital wallet and buy stable coins to get exposure to the dollar instead of the Argentinian peso. If you're in Turkey, which has faced a huge devaluation of the lira over the last 6 months, there's an enormous spike in demand for stablecoins. If you're in a region with difficult financial infrastructure, we complain about the financial infrastructure here in the US, but try to do a cross-border payment in South America, in Sub-Saharan Africa, in parts of Asia. The costs are extraordinarily high. If you're in one of those countries, you can now buy a stablecoin to prevent your money being in the local currency, which might be debased, or to conduct transactions on US quality financial rails. And there are a lot of people globally, right? There's another 8 billion people. So what stablecoins do is they open up demand for those dollars from all those retail consumers and businesses everywhere outside of the US that's never been able to access our market. And you've already seen it grow. Already today, stablecoins are about the 7th or 8th largest purchaser of US Treasuries. And that's before we have good regulation around stablecoins.
According to Matt Hougan, the United States is drowning in debt, with $37 trillion in debt, and more being added every year as a result of enormous deficits exceeding $2 trillion yearly. People must lend money to the U.S. government in order for it to continue operating, usually by purchasing U.S. Treasury bonds. Foreign nations, particularly China, have been major purchasers of these treasuries for the past 20 years. Hougan points out that the U.S. freezing Russia's treasury assets during the conflict in Ukraine was one significant turning point. That action sends a chilling message to other nations. Your assets may not be safe if you are not a close partner of the United States. Foreign interest in U.S. debt has thus drastically decreased. The U.S. is currently facing a significant issue. In the upcoming years, trillions of dollars will need to be refinanced, but the typical buyers are pulling out. There are really only two choices. Either locate a new class of purchasers or encourage more Americans to purchase the debt, which is restricted and would necessitate rising interest rates, making borrowing more costly. More significantly, stablecoins are already starting to buy a sizable portion of U.S. Treasury securities. They currently rank among the top 10 buyers, and that's before there are any explicit laws in place. Hougan thinks stablecoins could be purchasing over $1 trillion in U.S. debt once Wall Street banks join the market and regulations governing stablecoins are put in place in the United States. The buyer scarcity is resolved, interest rates are kept low, the dollar's status as the global reserve currency is maintained, and people in weaker economies are given financial independence. Remember to like this video, subscribe to the channel, and enable notifications if you thought his viewpoint was helpful so you don't miss any updates. We'd love to know what you think about the future of cryptocurrency markets, so please share your ideas in the comments section. We appreciate your time and hope to see you in the next video.